Hey, Kabod, can you hear me?
Yeah, I can.
Hey, Kabod, can you hear me?
Yeah. Can you hear me?
I hear you. How's it going, bro? Kabod, can you hear me? I can hear you.
Yes, I can. Yes, I can hear you.
Okay, perfect. Awesome. Yeah, bro. So, yeah, if you have any questions, feel free to let me know. We could go over anything that you need help with.
Yeah, can you show me like the scalping method?
The scalping method? Okay, sure. Is there a pair that you like to trade, or
Yeah.
so which one do you want me to show you on?
Yeah, basically I'm trading US 30.
US 30? Okay. So we'll go to US 30.
Yeah, and sometimes NAS.
Depending on which scalping method you want to use, do you like using the pivot strategy? Is that what you've been using, or is there something else? Because there's different scalping
Yeah,
strategies.
that's what
The pivot one?
like can you show me like the best one?
Yeah, so
The one you use, the one you approve?
it'd probably be the pivot one. So I'll show you real quick how this works. So I'll give you the requirements here. So for one, this is the K2 pivot scalping strategy. Let's close this over here. So the first requirement is that you identify the trend using K2 pivots. Second, you're going to identify a retracement or pullback. Third, you're going to identify a rejection of K2 pivots area. And lastly, you're going to identify a valid K2 signal. So once you have all those, you can enter on the open of the following candle. Let's make this smaller. So that's pretty much it right there. It's very easy, very simple. So first you want to identify the trend. In order to identify the trend, you want to make sure that price is below the pivots. The pivots are angling in the same direction. They're all angling downwards, and they're spread out like they are right here. So you can see that the prices under the pivots, that's the first one, that they're spread out, that's the second one, and that they're all angling in the same direction. So if all those are met, it's clear that price is trending down. You can see here, when price is above, it's trending up. If price is below, it's trending down. Above, trending up. You understand that?
Yeah.
Okay, so first requirement's been met. The next requirement, you want to identify a retracement or a pullback. So as you can see right here, price was trending down, right? So as it's trending down, retraced up, trending down, retraced up from this point right here. So from this point right here, this is a retracement upwards or a pullback. So requirement one's been met. We've identified the trend down. Number two, identify the retracement pullback. So right here, as price comes down, there was a retracement from right here and it came up, right? So that's requirement number two. The third requirement, you want to identify a rejection of the K2 pivots area. So right here, you can see price retraced up and then it rejected off this point and then it came back down, correct? So right here, all the requirements have been met. We've identified the trend down, we've identified the retracement, and we've identified the rejection right here. So the last requirement, you're going to identify a valid K2 signal. Right here is a valid sell signal, since it's a sell signal with a red bearish candle. Since all these requirements have been met, we fulfilled requirement number one, trend down, requirement number two, retracement, requirement number three, rejection, and requirement number four, we've identified a valid K2 signal. So once all those requirements have been met, you can enter on the open of the following candle. So right here, we're going to enter a short position. We'll put our stop loss at the previous swing, which could be here, or it could be here. It's really up to you how much risk that you have or that you can handle. So, depending on how your risk is, if you want to take a longer scalp, you can put it way up here. If you want a medium scalp, right here, short scalp, somewhere right here, but this might be a little too close. So, depending on how you want to trade it, there's three different areas you can put your stop loss. So if you put it right here, the closest scalp stop loss, it'd be about 100. Technically, this is 1,800 pips because these are calculated by standard pips. But if you're trading on, which broker are you using? Are you using Hugo's Way or CoinEx?
Eagle FX.
Oh, which one?
Eagle FX.
Oh, Eagle FX. Okay, I don't know how they measure it, but most of the brokers measure it by micro pips. So here, these are standard pips. So this is going to be 180 pips. But if you're trading it on something like Hugo's Way, IC Markets, I can't think of anything. CoinEx, one of those. Generally, it'll be measured by micro pips. So technically, this is 1800 pips right here. So once you have all these setups right here, you can let it play out. And then you can see right there, it hit TP, right? So that's pretty much how you apply it. So this is one direction.
I can use this strategy for NAS, right? NASDAQ.
Yeah, you can use it for anything. You can use it for Forex, US 30, NASDAQ, S&P, and anything. The strategy is based on momentum. So, you know, if the market is moving, then you can apply it on pretty much anything. And I recommend using it on the 10-minute chart. So look, we could look at NASDAQ right now too. Or let me go back first. I'm just going to copy the requirements. So right here, we'll go to NASDAQ, same thing. Same requirements. Play back to this point right here. Okay, so same thing here. Identify the trend. So you can see right here, price is below the pivots, right? So since price is below the pivots, next you want to confirm that the pivots are angling in the same direction. You can see right here that they're all angling downwards. So you see the red one, the orange one, the green one, and the yellow one. And then you can also see that they're spread out. So if they're spread out like this is going to confirm a downtrend. See the difference right here? When price is above it, it's trending up. Price is below, trending down. Price is above it, trending up. So right here, we've identified a downtrend. So requirement 1 has been met. The next requirement, you want to identify a retracement or pullback. So you can see right here, price was coming down, came up, and then it came down right here. You can see this retracement from this point right here. So as this goes up right here, this is considered a retracement or pullback. So requirement 2 has been met. So the first requirement and second requirement has been met. Third requirement, you want to identify a rejection off the K2 pivots area. So you can see right here, price comes down, rejects off this point. Here's the retracement, rejects off this point right here. So requirement 3 has been met. 1, 2, and 3 have been met. Trend down, retracement right here, rejection right here. The last requirement, you want to identify a valid K2 signal. Right here, we have a valid sell signal since it's a red sell signal with a red bearish candle. So all these requirements have been met. Requirement 1, trend down. Requirement 2, retracement. Requirement 3, rejection. Requirement 4, valid K2 signal. So same situation, you enter on the open of the following candle. You place your stop loss either at this swing or this swing up here or this swing up here. It just really depends on your risk tolerance. You know, some people want to take bigger positions, some people want to take medium positions. Sometimes people want to take small positions right here. It's really up to you. So I'll just put it right here, 1200 pips. And then you let it run. And there you go, TP. Same thing. See, it works for US 30, works for NASDAQ. I don't know if there's anything else you want to see. Do you want to see more examples or do you want to go over a different pair? I can show you on different pairs too if you like.
No, I'm good. I'm good. So this is the strategy you personally use for scalping?
Yeah, this is what I use, the K2 pivot scalping strategy.
Okay. Thank you. Thank you very much.
Yeah, bro, no problem. You have any other questions? I could show you anything else if you have anything else, or if you want to practice.
Basically, I just want to know about the scalping. You know, since you are giving the daily entries, I don't want to like focus on that now. I just want to focus on the scalping.
Yeah, because it's been moving too crazy. You don't want to hold it for too long. You know, you could go opposite direction.
Yeah. So you always send daily entry for your search, right? On the New York station.
So I'll show you that strategy. That strategy is a little different. So this is the scalping strategy for the daily entry. The only indicators that we use is the momentum indicator. So the way that this works is I'll put the requirements right here. So this is the K2 daily US 30 entry. This is once a day for each session. But we only recommend using it for New York session or London session. So for the first requirement, is you're going to look for entries after the New York Stock Exchange open, which is 6:30 a.m. Pacific Daylight Savings Time. And then next, you want to identify first valid K2 signal. And then last, you'll enter on the open of the following candle. Stop loss and TP is going to be 1,500 pips, 1-to-1 risk reward ratio. Okay, so I'll rewind to the open of the market, which is 6:30 a.m., so which is going to be right over here. All right. So I'll rewind to that point. So the first requirement, you want to look for entries after the New York Stock Exchange open, which is 6:30 a.m. And then right here, you can see this is 6:30 a.m. This is when the stock market opened. So after that, you can start looking for entries. After this happens, you can identify the first valid K2 signal. So you can see right here, there's no signals, right? So the first signal would be right here. And this is a valid signal because it's a sell signal with a red bearish candle. So once
What
those
time frame do we use?
time frames, 10 minutes.
Okay.
So this is going to be 10-minute time frame. So right here, you look for entries after New York Stock Exchange open, which is 6:30 a.m. right here. Next, you identify the first valid K2 signal. So right here's the first valid K2 signal. It's a red bearish candle. And then after that, you can enter on the open of the following candle. So same situation with the other strategy. Once this closes, you can enter right here for a short position. And then your stop loss will be 1,500 pips. And then after you do that, you can let it run. And there you go, full TP right there, 1,500 pips, easy. And then if you want to apply this during London session, you can also do that too, which is going to be 12 a.m. Pacific Daylight Savings Time. So let's see, we'll go back over there to that point. We'll go to midnight, which is 12 a.m. So right here, we're going to rewind to this.
But on my trading view, there's no 10-minute time frame. It's just 1, 3, 5, or 15, 13, and 45.
What was that?
Frames.
Sorry, I couldn't hear you. What did you say?
On my trading view, the time frames are it's either 1 minute, 3 minutes, 5 minutes, or 15 minutes. They don't have 10 minutes.
Are you using the free trading view? Or are you using the paid one?
The pro.
Pro?
Yeah,
Oh,
yeah.
click on your chart and then type in 10. So you can see right there, change interval to 10 minutes.
Where do I edit that?
Just click on the chart and then hit 10. And then you hit enter and it goes to 10 minutes.
I mean, there's no any space to enter like 10 minutes. Wait, let me send you a screenshot on Telegram.
Are you on your computer or are you on your phone?
On my phone.
Oh, on your phone. So you click on here, right here where the time frame is. And then you go to the bottom right here. And then you can type in 10 minutes and then you can add it to your list. Here, let me see. I'll pull up your. I see your screenshot. Let me pull it up on my phone. I'll see what it looks like on here. Let's see. All right, US 30. It shows on mine. Click on the where it says 5 minute. It isn't showing here. I'll send you a screenshot on mine.
You know, like on mine, there's no 10 minutes. Wait, let me show you.
Here, I'll send you a screenshot on my screen. See if we see the same thing. Oh, I see. Can you get on a? Yeah, you might have to go on a computer. Yeah, look at mine right there. See how mine has it. You might have to go on a computer.
Yeah.
you have to enable it first so that once you go on your phone, it'll be available. So you can see the screenshot I sent you. It shows up online. Let me see if I can add it on my phone. I'm not sure if you can do that. Let's see. Let's see settings. Yeah, you have to do it on your computer. So if you can go on your computer, you can enable it, and then it'll be on your phone after you put it on your computer.
Okay, I will. How do I enable it on the computer? Like on where?
So if you go on your
Or
computer,
at the bottom?
yeah, you can do it right here on the bottom, and then it'll add it to your chart, so that once you have it on your phone, it'll you can pull it up on there as well.
Yeah, I get it. Okay, okay.
Yeah, so that's pretty much it.
So
You know,
even
once
for
you have it,
scalping, we use the 10 minutes, right?
yeah, I recommend using the 10-minute. A lot of people use the 5-minute or the 15-minute, but I think the 10-minute has the best results. So depending on how you want to trade it, I think the 10-minute works best.
I will. So you advise me to take like the Marcus call on the London station, the US 30?
You can take the daily entry on the London too. So this is the London entry right here. If you took this position over here on Friday, you let it run. You have to move your stop loss. So for this position right here, do you understand how to use the exit strategy, or do you just let the position run?
No, what I do is always when it is TP1, I change it with my entry point.
Oh, okay,
Then after
TP1,
it's like
yeah. So right here, this would have been if you're using the exit strategy. So TP one would be somewhere around here in the middle, or no, it'd be somewhere over here, and then TP2 would be somewhere over here. So, you know, as price moves down right here, you would have moved your stop loss to this point. So you wouldn't have gotten stopped out. But if you let it run, then you would have gotten stopped out. So it just depends on how you want to, you know, manage your trade. But during this time, this was a Friday, I think. So the market moves a little crazy even once it reaches the end of the week. So this is risky. So I don't recommend trading on Friday, but if you trade on other days, so this was Friday right here, we can go to the previous day, Thursday, which was over here.
do you recommend trading on Monday?
Yeah, Monday is fine. Sunday and Friday is risky. I don't recommend trading Sunday or Friday. You know, what happens with a lot of people is they make a lot of profit during the week, and then on Friday they lose everything because they get too greedy. So I don't really recommend trading on Friday. I don't trade myself on Friday, so I usually don't recommend it unless you need to, you know. But it's better to be safer than to be, you know, risky, because right here, you know, if you didn't move your stop loss, you could have gotten stopped out. But if you moved it in profit, yeah, you would have, you know, reached TP1, TP2. But it just really depends. Like right here, this is on Thursday. We can rewind to this area right here. This is the Thursday entry. It's at 6 a.m., 6:30 a.m. And then the first entry right here. If you took this one, 450 pips or 1,500 pips. So if you took this trade, you know, straight to TP right there. Again, right here at midnight, same thing. So this is going to be the London entry right here. It's after 12 a.m., which is right here. And then the first valid signal is right here. If you take this entry, 1,500 pips. You can see right there, I hit full TP. So you could trade both. So this is the London entry over here. And then here's the US entry right here. So you can take both. If you take London and you take US, you could have won both of these trades. But this is Thursday, so this is not as risky. If you go to Friday, it's a little more risky. So right there, you see 2 wins back to back. This is the London entry, and then this is the US entry. So it's pretty
So
simple.
even you don't give out like the your daily US entry for Friday on Fridays, even yourself.
If I'm not taking it, I don't give out the entry. All the trades that I post in the all the trades that I post in the premium signals channel, these are trades that I'm taking on my own account. So these are trades that I'm taking. So if you want to copy, you know, every trade that I'm taking, it's everything that's posted here. So you can see right here on Friday, I didn't take that one. Like I
No, but
posted
like
it here.
on the okay, one question on the currency pairs you send out on the premium signal. How do you usually change the TPs every time it hit? Like for example, like when it hit TP1, do you change your stop loss by the entry?
Yeah, so I take two positions. I take twin positions. I take one where I adjust the stop loss, and then I have one position that goes to full TP or full stop loss. But it's kind of, I don't know if you can do that. You know, it's hard for people to manage multiple positions. If it's hard for you to manage two at a time, then just take one position and then move your stop loss. But for me, you know, I'm experienced. I've been doing this for so long, so it's easy for me to take two positions at once. So it's really up to you. You can do what I do, take two positions. One of them you move
Even
stop loss.
like even on the second position, like once you're in profit, you don't change it up to the entry point, at least to
Yeah, I
be
don't.
safe.
No, I don't. So I don't change that. I just let it run because most of the time, you know, you've seen our win rate. Our win rate's so high that if we lose, it's fine because I know, you know, the next win, if I win that, it'll balance out. So, you know, if you take every single trade and you do that every single time, as long as the win percentage is, you know, higher than 50%, you're gonna, in the end of the month, end of the year, you'll still be in profit. So for me, it doesn't matter to me because I can, if I win the position, so say if I take these two right here and then I do that same strategy, I win TP1 right here, could because TP1 would be somewhere over here, right? So if I took this position, I would win TP1 plus I win full TP. So instead of me winning just one profit, I win 1.5 profit.
Yeah.
So it just depends on you on how you want to trade, you know, because I know how my strategy works. I know how K2 works. It's very high win percentage. So even if I lose this trade, say if this was a lose, so if you know whatever or we can go over here. So this trade, I win 1.5, right? Win half profit and then full profit. Right here, double profit because it didn't stop me out at TP1. So here I win 1.5. Here I win two times. And then over here, if we go to the next day, I'll just show you a loss because, you know, this one would have been a loss if we didn't move stop loss. So again, right here, see if you run this here, you would win half profit because we would have made to TP1 and then we would have lost the other one. So we win 1.5 here, we win two times here, we win half here, 0.5, and then we lose one trade, one full trade. So if you add those together, you know, you're still in profit at the end of the week. So it just really depends on how you want to apply it. I mean, if you want to be careful and you're not able to manage the position, because I know you're in school, so you know it might be hard for you to be on the chart all the time. So if you want to do that, then maybe it's better for you to just adjust the position, just run one, because if you run, you know, multiple and you miss one, you forget to move the stop loss, you can lose double profit if they both hit stop loss and they don't reach TP1. But most of the time, they almost always reach TP1. So in this situation right here, you know, if we lost one trade because we have the twin position, one position we wouldn't have profit. So technically, I only lose half of the trade because I made profit on the first one, but I lost the second one.
Yeah,
So it
but
just
like
really
since
depends
as I
on,
told you, like I have like 700 in my account. So until it grows, maybe I should use only one trade, like only
yeah,
0.01 lot size.
yeah, exactly. For US 30, you can't trade with, you know, you don't have enough margin to cover two positions at once. So, or you can do it, but you can actually no, I wouldn't recommend it. Not maybe for Forex, but not for US 30. Maybe something cheaper because your account you don't want to get margin called out. That's the worst part. You know, if you say if the price goes all the way over here to drawdown, and then you have two positions, they margin call you out. They take you out because you don't have enough capital to handle the position, but then it ends up going straight to profit. because that happens a lot. That a lot of people, they try to trade with me, but they have a small account. So the thing is, if it goes into negative temporarily and they don't have enough money, the broker will kick them out of the trade. You get margin called, and then it goes straight to TP, and you be mad because you could have made the full TP, but your account just wasn't big enough to handle. So if you're gonna do this strategy, then I recommend only one position if you're trading indices. If you're trading Forex, that's fine because you can use a smaller lot size. But for indices, it requires a lot more money to trade in this way.
Yeah. So as I told you, until it grows, I'll only use one.
Yeah, that should be good. You just use one. And I think if you want to just let it run, you don't even have to adjust your position. You can probably just let it run to full TP because, or I mean, it's up to you, personally. It depends on if the risk is too much for you, then yeah, adjust your stop loss. But the daily US 30 entry is so accurate, it usually hits. Like, just looking at our results here, let's see what our results are for US 30. Yeah, so our US 30, we've only, let's see, for the whole year. For the whole year, we've had 55 wins, 12 losses. So if you do the math of that, you do so it's gonna be 55 divided by 67. Our win percentage is 82%. It's a very high win percentage. So if you just let it run to full TP, you can be perfectly fine because our win percentage is so high. But if you want to adjust it, then you can adjust it. That'll minimize your losses. So it's really up to you how you want to trade it. Everyone trades differently. There's
What if
different.
I do like, what if once it's like reach some TP1, I just change my entry with the stop loss. The stop loss is my entry and leave it alone till it hits TP2.
Yeah, you can do that. You can move your stop loss to TP1, but here's the problem. So you can see your price goes to TP1 and then it pulls back. So you get stopped out in profit. But then it goes to full TP after. So it just, it's really up to your preference. How do you want to trade it? Even right here, TP1 would probably be somewhere over here. See, price goes down to TP1, it will stop you out, and then it goes to full TP right here. So it just depends if you want to let it go to a full TP or if you want to minimize your risk.
So like, what if I do like once it TP1, then I'll change my stop loss with my entry. So when it goes back down, like it will stop me out. Then again, when it comes to the entry point, what if I enter the trade again?
I never recommend doing that because you're chasing the trade. So say right here, if you did that over here, see, you go to TP1, you get stopped out, then you try to enter again over here, you would have gone stopped out full profit. You could have just made profit here, but because you're chasing the trade, you would have gone stopped out. So if it hits TP1, I don't recommend, like if it hits TP1 and then you get stopped out in profit, I don't recommend you re-enter because you might get trapped in a trade like this. But it's really up to you because even if I tell you as much advice as I tell you, you have your own emotion. So if you're in the trade, you're going to do what you want to do. But me personally, I don't recommend that you re-enter if you've already been stopped out in profit. Because I've given a lot of
Like
advice
just
to a lot of
basically my
people.
goal is just to grow my account, like just to grow my account. So you know better than me. So
Yeah, so for
I just hear out your advice.
yeah, so definitely if you want to be careful, then just move when it reaches TP1, move your stop loss to TP1 and then just let it be. Don't re-enter the trade. Because if you re-enter the trade, you don't want to get caught in something like this because this can happen, especially if you're trading on Friday or Monday or Sunday when the market is just opening or just closing. The market it'll be risky. But if you're very careful, see, like if you reach TP1 here, you would have made 750 pips on this one, 750 pips on this one, and then again right here, 750 pips, but no losses. So if you calculate that, 750 pips times 3 times with no losses, you multiply that by 10 cents per pip, you could have made $225 for these, and then you slowly grow your account. So your account is 700 right now. You add that to what you currently have. Now you have 925 at the end of the week. So every week you keep doing that. You keep adding maybe another 200, maybe 300. then it just keeps adding, adding, adding. And then once you have a big enough account, you can start, taking more risk. You can just let it run.
Exactly.
So, yeah, you have a good understanding of risk, because a lot of people, they don't like to adjust their stop loss, but you're smart, like you know what you're supposed to do. So you want to do it properly, and you want to grow your account slowly instead of growing it very
Mm.
fast, because if you grow it too fast, you can blow the account immediately if you make a mistake.
No, I know. No, I know. US 30 did me bad very too many times.
Yeah, a lot of people, they get too greedy with US 30, but you're smart with it.
Do you do account management? Like, do you do account management?
No, I don't. It just doesn't make sense for me, because I do the FTMO. So unless someone can match the account
Yeah,
size.
and I just want to ask you about that thing. Like every time I see on the group chat, like FTMO, what is it?
FTMO, so basically what they are, they're a proprietary trading firm. What they do is, if you can prove that you can trade properly and you have proper risk management, I'll show you. So if you can trade properly, you can, they'll give you a funded account. And then if you can continue to trade properly, then at the end of each month, you will keep 70% of the profits. But I don't recommend it unless you're good. If you can't trade, your own account, it's going to be impossible for you to be consistent with FTMO, because FTMO requires that you trade with good risk management. So basically, what you'll do is you'll sign up for an account. Depending on your account size, I have the 100,000 account right here. It costs 540 euros to sign up for this account. But if you can pass this within, so they give you 30 days. In 30 days, if you can hit a profit target of 10,000, then you move to verification phase. Then you get 60 days to make 5,000. Once you pass this, then you get a funded account. So all the profit that you make at the end of the month, you get to keep 70% of that profit. But it's not as easy as it seems. It looks like it's very easy here, but the thing is, when people start trading FTMO, they get greedy. They want to just make as much profit as possible, but then they end up losing, because there's also requirements here. Your maximum loss is going to be 10,000. Your maximum loss for the day is going to be 5,000. A lot of people, they get $100,000 account. They think, okay, I can, take all of the risk possible, but they don't realize that if they lose 5,000 within one day, they fail, and they have to do it over again.
The little
So
challenge, yeah.
yeah, so you have to understand proper risk management. I can tell that you understand it a little bit, because you understand that you're supposed to move your stop loss, because the key is for not just FTMO, but the key in trading in general is to minimize your losses. It's not about maximizing your profit, because the more profit you try to reach, that's going to bring on more risk. But if you're able to, make a lot of wins and have little to no losses, you'll be in profit regardless at the end of the month, and then at the end of the year. It just really depends on, you trading properly, because that's the problem with a lot of traders. A lot of traders just get too greedy. They don't adjust their stop loss, and then they get stopped out. And then, if that happens so many times, then, they blow their account, obviously.
Yeah, man. And like now, my plan is currently, aside from like your daily entry for US 30, I just want to do like from 500 to 1,000 pips daily by scalping.
Oh yeah, you can do that. But scalping is also risky too. I'm sure you understand the risk with scalping. With scalping, it's a numbers game. How many scalps can you take? Because if you don't take all the scalps for the day, and you take one big loss, that could hurt your account a lot. So scalping is good, but you have to be very on point. I don't think you should scalp on your phone, because it's hard to follow the data. Price is moving so fast. And if you're trading on your phone, you're gonna miss when price moves or when price spikes up. So if you're scalping, I don't recommend you do it on your phone. If you can do it on your computer, it makes more sense. But see, like if you're taking this trade over here and you're trying to scalp this, you can see how fast it moves during. So let's see. So say if you're scalping, and you stop looking at your phone for a few minutes. So you can see right here, it moves down in profit. See, when you're scalping, you have to move your stop loss quickly. So once it moves into profit, you have to move your stop loss right away. See, if you miss this, you could have gone, it could have went very bad for you if you didn't move your stop loss in profit. So, if you're scalping, I don't recommend you do it on your phone. It's possible. I've done it on my phone before. I do it on my phone a lot, but it's because I have a lot of experience. I've done this for so long that I can move very quickly. But if you don't move quick enough and you don't move your stop loss right there, it goes straight to, it ends up hitting your full stop loss. So I don't know if you trade normally on your phone or if you trade on your computer, but it's difficult to trade on your phone if you're not able to look at it during your whole trade. If you're scalping, I recommend you look at the trade until your trade is closed. Like, never take your eyes off the trade, because this can happen here. It goes to TP, halfway to TP. If you don't move your stop loss, it goes straight to stop loss.
Yeah, you're right.
Yeah, because especially right now, the market is moving very fast because the U.S. elections is coming up. So this is going to happen a lot, where price is moving so fast back and forth. So I don't think you should scalp if you're not able to look at your screen all the time. I recommend just taking the daily entry. So we only trade once or twice a day. If you're trading in the London or the US, you just take one trade a day. If this, once this hits TP, you're done for the day. If you
So
took
you
this trade,
approve the London one?
yeah,
I should take it.
the London one's fine. The ones that Marcus calls, he's using the same strategy. So if he calls it, I think it's good. Just make sure to monitor your trade. It's just easier if you take this, because you're only focusing on one trade a day. You're not taking so many scalps, because some people, they'll take, so many scalps a day. They'll make 5 wins and then they have one big loss. They lost all the profit. For here, you have a calculated risk. You know how much you're going to risk. You know how much you're going to make. So if you do just once a day, then you could be perfectly fine. But the problem with scalping is that people start to overtrade. If you have 1, 2, 3 wins, you start to get greedy. You start to think, oh, I can make more and more and more money. So they keep trading, and then it ends up losing everything after one trade. So I personally, I used to scalp a lot, and I lost a lot of money scalping. I made a lot of money scalping. So it's really a give or take. If you're not able to focus on scalping 100% and be on your computer and make sure that you're following it, then it's going to be difficult for you to follow that. So I recommend just taking the daily entries if that's possible, if you can do it, because then it just won't be
And should I
as
add the
difficult.
FOREX pairs too, like on the deal?
What was that, the Forex?
Yeah, the FOREX pairs, the currencies. Should I take them too? The one you sent on the premium channel?
You can, but so here's the thing: if you're taking that and you're taking US 30, you can't take both at the same time because your account's too small. So if you if you end up taking too many trades, you might get margin called out. So it just depends. I recommend you just take the US 30, but if you want to take the Forex, you can take that too. But I'm just saying that I don't want your account to, you have multiple trades and then you get margin called out, and then they end up paying.
Just take the US 30.
Yeah, exactly. I think that if you want to grow your account, that'd probably be best.
Okay, well. So you usually send Monday, Tuesday, Wednesday, and Thursday? Or 4 days a week?
Yeah, usually. Sometimes on Friday, if the market looks good, then yeah, it'll be sent on Friday too, but not every
But
Friday.
this week you only sent 2 times, right? This week? The past week?
Yeah, yeah, I only sent 2 times because there was news during the week. There's a lot of news this week.
But so you usually send more than 2, yeah? Like on the other weeks?
Yeah, well, Marcus he sends the trades every London session, so that's not counted in the official, but there's more than just, my trades, because I'm not, I have to go to sleep too, so I
Yeah,
can't be.
I just wanna take only your trades until I grow my account, so I can, when I have like enough money, I can risk for a Marcus trade, you know.
Yeah, yeah, exactly. Yeah. So yeah, it just depends on
But for a while, I just wanna take only your trade. It's called like you're the one good at it.
yeah, because it's better for you to take, more accurate trades than to, overtrade, take too many at once. So
Yeah.
there
Well, like
there's
at least once it reached 1,000, I can take Marcus. But like for a while, I just wanna take only your trades.
exactly, yeah. So just take my daily entries. Normally I do take more than last week. Last week there was just a lot of news, so I only posted, I think, 2 US 30 trades. But
Yeah.
you know, if the week is good and there's not a lot of news, like there's no Fed news or anything like that, then yeah, I'm going to be calling more trades. But currently, there was just a lot of stuff last week. You know, because I'm more about accuracy. I don't want to take so many trades. I'd
Yeah,
rather have,
yeah,
you know, few trades and they have them all win rather than take, you know, 5, 10 trades and then have half of them lose.
yeah. That's how it should be.
Yeah. Yeah, I think
Thank you
that's it
so
for,
much.
yeah, bro,
Yeah,
no problem. You know, if you have any other questions or you're still confused with something, just let me know and we can
yeah,
get on
I'm
this.
good. I'm good. Yeah, I'll text you if there's anything.
Yeah, bro, text me. And then, you know, I do recommend you just take the daily entries. I think if you do that, like say if you took all of the daily entries last week, you could have grown your account decently, you know, a couple $100. And then, you know, you keep doing this every week, every month, and then it'll grow eventually.
Yeah, once I reach 1,000, like I'll try Marcus Street.
Yeah, definitely. You know, just take it slow. There's no rush because, you know, the market is always going to be there. So as long as you're careful and you trade properly, use proper risk management, you should be very good and you should be good long term.
Yeah, or should I take Marcus Street on Tuesday and Wednesday, called the good days on Tuesdays and Wednesday
Yeah, you could take his trades. You could take his trades
on
during
Tuesday.
London. Yeah, it should be fine. I think middle of the week you should be fine. And then during the beginning and the end of the week, then it's a little risky. But you can start taking
Maybe
his
I'll
trades.
take it on Tuesday and Wednesday. Only Tuesday and Wednesday.
Yeah, that should be good. You should be good if you take
Yeah.
those.
Okay. Okay. I'll do that.
Yeah. All right,
Thank
bro.
you. Have a good day.
Yeah, no problem, bro. I'll talk to you soon.
Okay. Thank you so much.